Welcome back to Coin Lady channel. In this video, we will cover a wide range of topics. So that you all are alerted, I'm going to tag it as an XRP video. It used to be that a family could buy a house, a car, and put their children through college on just one wage earner's salary. That was the 1950s. The 50 seconds was way ahead of my time, but how did that lead to where we are now? Seriously, consider it. This could now be covered by a single hardworking individual. To make ends meet, a couple with 2 full-time jobs has taken on a third part-time position. Inflation is what got us here. The Federal Reserve is printing a lot of money, and the government is spending it recklessly. There must be a conclusion to this. With inflation at record highs and the fiat system in disarray, it may seem as though global economies are about to implode. But the US government is actively cracking down on crypto. They want you to think their CBDC is the only hope for your survival. To put it simply, no. So, in the President's economic report that was released on Tuesday, the Council for Economic Advisers showed blatant disregard for the supposed benefits of Bitcoin and other cryptocurrencies. According to the study, digital currencies are not viable substitutes for fiat currency because they lack intrinsic value. As they advocate for a CBDC, they would have you believe that crypto is useless in any and all circumstances. They don't want you to have crypto for a number of reasons, though. In this video, we'll cover that topic. However, with regards to the US dollar, I still put my faith in crypto over the USD, as we all know the USD will eventually collapse. In light of the current state of the economy, there will soon be hyperinflation. There will be widespread damage to the banking sector, an increase in the unemployment rate, and the bursting of the housing bubble in some countries. Now what? Money in hand rules. Precious metal prices, including gold and silver, will rise because of cryptocurrency. In light of what I've said, it's not a good idea to treat cash like king right now. However, as the value of the US dollar decreases, cryptocurrency prices will rise. If you don't like cryptocurrency, you could invest in precious metals like gold and silver. Bank runs are not the problem, and crypto is the answer. I've always been confused as to why they want us to leave crypto. What is it about crypto that they despise? Banks and other financial institutions are entrusted with the majority of our cash and securities for this very reason. They are keeping the assets for us and recording our ownership in the books. This situation is inevitable due to the fact that it has been impractical for us to assume control of our assets for many years. All aspects of the economy, from trading to lending to borrowing, rely on custodians. The end result is a combination of extreme government trillion-level regulation of custodians and blind trust in those custodians. Since chartered banks are limited in the amount of risk they can take with customers' funds, the general perception in the West is that deposits there are safe. But here's the real deal. Since Janet Yellen has indicated that we are likely going to bail out more banks, those banks will engage in riskier behavior in the knowledge that the government will step in and bail them out if things go south. Perhaps this is why skeptics of cryptocurrency are so vocal. Using it in the future could make you your own bank. You can ditch their outdated system now. Cryptocurrency is versatile. You can use it to secure loans, make interest-free loans, and generate passive income. Using your crypto skills could help you in many ways. Because of this, their hatred is warranted. In a scathing economic report, the White House takes aim at cryptocurrency. One of the main reasons they're so opposed to crypto is that they want to see a CBDC implemented so that they can continue to monopolize the financial system. However, I'm convinced that crypto investors will prosper in the future. The CBDC system might be avoided. If you want to know what's up, this is all you need to know. I expect crypto holders to have access to private options. There is an all-out assault on the banking system, including local financial institutions and cryptocurrencies. The recent events are a show of force meant to intimidate people into submission. The timing of the release of the new CBDC paper was not coincidental. As you can see, a CBDC can have a significant positive impact on welfare, despite having a negative impact on banking sector stability. They claim that a CBDC will be necessary to safeguard society as the financial system collapses. That's why they keep arguing for it every day. 3 times the official estimate from Congress, the Inflation Reduction Act will lead to $1.20 trillion in government spending to combat climate change. So claims Goldman Sachs. In today's updated forecast, the purpose of last year's Inflation Reduction Act was to promote funding for sustainable energy and energy-saving technologies. As such, decarbonizing the economy to prevent the worst effects of climate change is one of the top priorities of the Biden administration. They want a CBDC in part because they plan to link carbon credits to the digital currency issued by the central bank. Thus, in the future, you will be in a bind if you don't have carbon credits. Furthermore, this is just another method of taxation. Intel Business Assembly: the global warming scam is unprecedented in its scope. Actually, current levels of carbon dioxide emissions are among the lowest ever recorded. There is no strategy to repair the situation because the goal was total destruction. Keep in mind that their ultimate goal is to bring the current financial system crashing down. Still, no one you ask outside of the crypto community can see it coming. They are optimistic that banks will eventually get better. Things will improve in the future. As long as they maintain the myth that this is a safe haven for savings, eventually everyone's wealth will be sucked in at once. Why does CO appear on invoices now? I'm going to explain why. They are developing a system to assign carbon credits. What you can buy will be strictly regulated. If CBDCs show up while you're already at your spending limit, they'll prevent any further purchases from being made. You can count on this being their strategy. Look at what's happening in Europe and the UK now, because they are moving a lot faster on these issues. They are also beginning to realize that a CBDC is on the way to the United States, which will make it possible to keep track of carbon emissions. Now that there are some people willing to fight for crypto, I figured I'd tell you about it. For the sake of the blockchain ecosystem, Emmer introduces Bill, who can shed light on the relevant regulations. By their very nature, crypto and blockchain technologies are difficult to legislate for. In the past, policymakers considered this when developing rules. The blockchain ecosystem has been crammed by federal regulators and lawmakers into illogical statutory definitions for far too long. It shouldn't be too hard. Money transmitters must have physical possession of client funds. According to Emmer, his legislation will provide the blockchain community with the assurances they need. The longer we wait to provide this straightforward clarification, the more likely it is that this game-changing technology will be exported, leaving American consumers and investors out in the cold. The United States will maintain its position as a global leader in cryptography thanks to this legislation. Even Tom Emmer is doing his part to defend cryptography. He hopes to preserve a creative environment. He despises the idea of one American firm after another leaving the country. Tom Emmer, for one, might benefit from a lengthy conversation with Gary Gensler about the current state of affairs in Washington. Justify to him the necessity of dropping our anti-crypto campaign. Reason being, it's not just investors who are relocating their crypto holdings out of the US. Investors in cryptocurrencies are scrambling to find safe havens in countries that are less likely to crack down on their investments. Where you choose to call home can have an effect on how much tax you end up owing when you bring in money via online endeavors. People in the crypto community have been saying that's it, I'm leaving the US for years. I have stopped reporting and paying capital gains tax. I'm relocating to a place like Costa Rica, which doesn't have it. However, once many people arrive, they quickly find themselves unable to make ends meet. They're too quick to get rich and even quicker to blow through their wealth. If a CBDC is on the horizon, now is not the time to cash out your crypto and buy a Lamborghini, because you never know when you might need to rely on the universal basic monthly income. If you play your cards right, 2023 could be a huge year for cryptocurrency. Some politicians are finally speaking out against CBDCs. Politicians like Tom Emmer, who is advocating for regulatory clarity, are speaking out in favor of innovation and fighting to keep it in the United States. In any case, XRP will shift as we get closer to the event. If Ripple prevails in that case, I predict that the value of XRP will surge so rapidly that many of you will soon have access to fortunes that will change your lives. What you do with it is up to you, but I think we can still avoid a CBDC system if we play our cards right. Everything seems to be leading in that direction, though perhaps we could have a much better life under a CBDC if you have the financial means to do so. Therefore, we must watch developments with interest. But I wanted to make a video to emphasize the significance of current events. This concludes my commentary on this topic for this video. Please accept my gratitude for tuning in. Please like and subscribe my channel. See you in the next one. Bye.